This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup, and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Hello, this is Hall Martin with Investor Connect. Today we're here with Jeffrey Bunin, Vice President of Commercial Lending of Capital Lending Corp. Capital Lending Corp has smart and savvy residential, commercial, and business financing solutions. CLC arranges for financing through direct funding sources as a New Jersey licensed correspondent mortgage lender regulated by the state and federal governments. Jeffrey, thank you for joining us.
Thank you for having me.
Great. So what was your background before investing in early stage companies?
Well, we do lending, not investing. Just want to make sure that we fund companies that want debt financing and are qualified for it. Okay, we do have contacts with the VC community. Okay, but that we don't specialize in that.
Okay.
I just want to make set the table correctly.
Sure, that makes sense.
My background is I started off as a chemical engineer. I have a chemical engineering degree from the City College of New York, CCNY, and an MBA from Rutgers Business School. And I started off as a chemical engineer, got my MBA at night, switched over to corporate planning in the chemical sector. All right, and for 20 years, I was director of corporate planning for a large specialty chemical company in New Jersey, and helped it grow from 30 million to 350 million before I left. I'm also a former adjunct professor at the Rutgers Business School in the MBA team consulting program. And then I joined up with my good friend, Carlos Fontana, who's the CEO at Capital Lending, back in about 2005.
Good deal. So what excites you right now?
Well, I tell you, the amount of technology, especially fintech technology and medical technology, is really breaking down barriers and making companies and supply chains much more efficient. And they're bringing out cost savings tremendously and making it easier for people to do business online and offline. And so I think that's that's driving a lot of the investment dollars these days. Okay, also medical technology, telemedicine is really huge. Okay, and then basically, those companies that are also making the real estate sector more efficient, serving the needs of property managers and their tenants. And it's really an exciting time to see all these new companies blossom. And what's really interesting, when I was in consulting, after I left the chemical sector, and before I came to Capital Lending, I did consulting for a company called Dynamco, which is a predecessor to Tremor Video, which is an ad streaming company, and they're the ones who invented inserting ads in TV and in streaming video. And I helped out one of the original founders, Jesse Chenard, do his business planning, which resulted in his merger with Tremor Video. And I ended up getting stock certificate number 12 for the merged company, which was pretty cool.
Great. So you see a lot of startups out there. What's your advice for people lending to startups? What do you tell them to do before they put the money in?
Well, I got to tell you, in lending, it's always the same four principles: cash flow, credit, collateral, and management. And management is number one. okay? Because a lender has to believe that the management team can implement the plan and overcome whatever obstacles come in their way. And so, I mean, the lender has to believe the management team can implement the plan successfully. And as the plan itself, one of the things we have to do at capital lending is when we're lending for any project, is assemble a loan package from the material supplied by our client that is easy to understand, that the lender can appreciate and then act on. And it has to be self-explanatory. And we do run across a lot of situations where we do have to put a lot of work in to get that done. And we're glad to do it, for worthwhile projects.
Well, great. And then on the other side of that equation, what's your advice for people running startups? What do you tell them to do before they take out a loan?
Well, I mean, first of all, they have to, investors look for the same thing lenders do. Investors, of course, are betting on the come, whereas lenders want to get paid when the loan starts. But it's the same, everybody wants to invest in a company that has good prospects, and has the ability to somehow generate cash flow for the investors in the startup phase and for the investors and lenders when the company is a little bit more mature and is cash flowing. I would advise startups and early stage companies to check out the lending side, before they check out the equity side, because lending is cheaper than debt. Debt is cheaper than equity. All right. And there could be situations, there's some types of financing available for especially asset-based lending, like factoring and receivables financing and purchase order financing, that would enable them to not need as much money as they think they might to get the company moving in the right direction. And we have all sorts of ways of looking at things and figuring out how we can be of assistance. So check out the lending side before you get too much in equity. You have to let us help you stretch what equity you have before you add some more.
Great. Well, let's talk about the state of startup funding. How do you see the industry evolving these days?
It seems like a lot of the equity, venture capital situations are looking for unicorns. Basically, those 1,000,001 shots that have the ability to explode in value. And goodness knows that's a worthwhile thing to look at. But there's a lot of other areas which may not be unicorns, but offer very nice returns on investment. Okay. They're not going to be the next Bitcoin, or Coinbase, but they offer some very good returns on investment and serve some real, very, reasonable needs in the real estate or healthcare area or senior housing area that will pay a good positive return on investment. And so I think instead of looking for the next big exploding company, shop for some less risk adverse situations where the rate of returns are reasonable but don't include the risk that some of the other ones have.
Well, great. And so what do you think is the biggest change you think we'll see in, say, the next 5 years?
Well, the next big change, I think, in the next 5 years is going to be a continuation of cost savings, and especially with 5G. 5G is going to make things like telemedicine almost instantaneous. It's going to make it in real time. All right, so it's going to compress the learning curve, okay, and the time it takes to get to market, okay, because communication is going to be so much easier. All right, so 5G definitely is going to have an effect on many sectors of the economy. All right, and including entertainment, including medicine, including teleconferencing like Zoom. Okay, it's going to be really revolutionary, probably more than a lot of other sectors. And the other thing I look for is President Biden's infrastructure bill, really adding meat to the structure of the country. All right. I mean, telemedicine. I mean, delivery. Okay. What do you call it? Supply chain, logistics, and the electrification of the transportation industry are going to depend on that type of infrastructure serving it. Okay, GM and a number of other automakers are supposed to go all electric within the next 20 years, which means we're going to have to reinvent the electric grid. We're going to have to reinvent how power is generated. We're going to have to reinvent how it's distributed, and there's going to have to be charging stations at every place that's now a gas station, including maybe in parking lots as well. Okay, so there's going to be a lot, and I would call all those jobs, all those infrastructure jobs, I would classify them as green jobs, because those infrastructure jobs are going to lower, I believe, lower our costs of energy and make us all more efficient, and thereby decreasing our energy requirements.
Well, great. Well, let's talk about your investment thesis. What is your criteria for making an investment, and what do you look for to put your money into?
Oh, okay. Well, the way I'm a bit on the conservative side. Okay, I basically look for companies that are well established and are going in the right direction and contributing to economic growth. All right. I'll tell you from a capital lending viewpoint. Okay, in other words, I don't own any Bitcoin, and I don't intend to. Okay, I just don't. I think what's his name said. A famous investor once says he doesn't invest in anything he doesn't understand. And and Bitcoin is something, and the cryptocurrency is something I just don't really understand and comfortable enough to invest in that sort of thing. But in capital lending, as I mentioned before, we look for cash flow, collateral, credit, and management, and a business plan that is self-explanatory and covers all the bases and shows that, at least in the base case, they're able to explain coherently, okay, how they're going to make money and pay back whatever loan they have to get.
Well, great. Well, you see a lot of startups out there. What do you think is the main challenge you see startups facing today when they launch their business?
Well, I see the main challenge is funding. There's so many of them out there. A lot of times we get investments, packages that are not very well done. And they have to explain to the investor how it benefits the end consumer of that product. All right. If they have to explain to the investor how that product is going to benefit the end consumer, it's very important that they get their idea across. And we see a lot of things where that isn't really delineated as to how their product differentiates them from competitors, and how a customer is better off with their product than without their product.
Very good. And then what is the challenge investors face in today's market?
Wow. Well, the challenge investors have faced is they have to decide what their risk tolerance is, okay, and make sure they're not investing in items they don't understand, or just is not within their investment goals. Okay, they don't want to mix. You're a conservative investor. okay, and you're looking to, retire in the next 10, 20 years, then you have a different outlook than somebody who's in their 20s and has a different time horizon as to how investments might pay off.
Very good. And you mentioned several sectors and applications a moment ago. If you had to pick one or two that you think are the best opportunities for investors to pursue, what do you find most interesting out there?
Well, I already mentioned telemedicine. I already mentioned 5G. I already mentioned fintech technology, enabling transactions, be it mortgages or bank transfers or banking in general to be done more efficiently. Okay. But there are so many out there. And AI, artificial intelligence, probably is another one that's going to be, whose combination with 5G is also going to be a huge, investment opportunity.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
When people seeking funding are looking for looking for those funds, they should look at things from the funding sources viewpoint.
Ah.
Make believe that it's your money going to be invested in your company. What do you have to tell the investor or lender that's important to make them believe that what you're doing is worthwhile and it's going to pay them back what they want?
Well, that's good advice.
We frequently find that perspective missing. And that's what we tell people we do is we have to look at it from the lender's viewpoint. That's what capital lending does. When putting together packages that are self-explanatory, so the lender has a feel that what's being presented to him is plausible and doable.
Well, great. Well, appreciate the information. How best for listeners to get back in touch with you?
They can call me. I'm on my. You can call the office at 201-295-1400, and my cell is 201-207-5686. And the email is jbunin@capitallending.com. CAPITALLENDING.com.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up.
Sounds good to me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.